As investors prepare their portfolios for a new year, it's important to take a look back and study the stocks that made the biggest moves. That way you can analyze when would have been the best time to buy and the best time to sell. That kind of post-analysis is invaluable when it comes to improving your trading skills, so you can keep an eye out for what will be the next big winners in the year to come. E-commerce software leader Shopify has no doubt been a top-performing growth stock this year, more than doubling since a breakout in February. So let's take a closer look at this first setup for the stock that sparked the breakout. Now, this 6-month-long consolidation was the first real pause for the stock since it moved from 45 to 175 over an 18-month period. Now, when you see a consolidation like this, it can provide enough of a reset after a big move to create a new setup for another big move. And during the correction of Q4 2018, that's what we're showing here, Shopify's relative strength line was hitting new highs. And that relative strength line measures price performance versus the S&P 500. And it was hitting new highs before the stock was hitting new price highs. That's very bullish to see, and it signaled to us that this stock had the potential to be a big winner once a new uptrend occurred. The market began rallying in January, and by February, we were seeing a lot of breakouts for top growth stocks, including Shopify. Now, this breakout was boosted by a quarterly report that showed earnings growth of 73% and revenue growth of 54%. That's well above the 25% growth that we ideally like to see for top growth stocks. And from there, pivoting back to a weekly chart here, Shopify staged a picture-perfect run over the next 6 months, finding support at its 10-week moving average along the way. Now, support like this along a stock's run is another bullish quality that we like to see, and it also provides investors the opportunity to add shares to their positions, or for aggressive investors, the chance to initiate a position. And this run was also accompanied by strengthening fundamentals, with earnings growth showing massive acceleration over the next 2 quarters. And by late August, the stock had run up from 177 all the way up to 409, and it had become well extended from this 10-week line here. Now, shortly thereafter, the software sector was selling off, and Shopify shares broke below their 10-week moving average for the first time since this February breakout, and the drop came in heavy volume. That marked a clear sell signal for investors. Now, at this point, some investors may choose to exit their positions, while others may opt to take only part of their position off the table. Either way, this move signaled the stock was ready for another break and needed to consolidate for a while. Now, if we take a look at the current daily chart, we can see how Shopify was able to find support at its 200-day line. That's this gray line here. And it's a key test for the stock, and yet another positive signal, as many former leaders this year were unable to hold above their 200-day lines when the market hit turbulence in August and into the fall. Still, it was important for investors to remain patient and wait for a proper buying opportunity to get back into this stock. And that opportunity presented itself just recently, with shares climbing above a 349.54 buy point from a double bottom entry. Now, investors would want to make sure they're not chasing the stock here and only buy if it's within 5% of the pivot point. Now, another buying opportunity could potentially present itself if Shopify forms a handle on its way to approaching those prior highs. Now, since Shopify had such a massive move in 2019, some investors might question whether the stock still has room to run, especially with a bit of fundamental weakness now presenting itself here. Earnings are taking a hit in the short term, but that's because the company is diversifying its business model. It's expanding beyond e-commerce software and into fulfillment centers for its merchants, directly taking on Amazon. And COO Harley Finkelstein says the company still expects to turn in the same level of revenue growth during that process. And taking a look at 2020 for Shopify, analysts expect annual earnings growth to surge 384%. That signals the growth story for Shopify is far from over, meaning the stock could have a lot more room to run.